Hi everyone, I am Suhasini, MCOM final. I am explaining the topic about tax planning in respect of employees' remuneration. Meaning of employees' remuneration. Remuneration is the total compensation received by an employee. It includes not only base salary but any bonuses, commission payments, overtime pay, or other financial benefits that an employee receives from an employer. A job perk may or may not be a component of employee remuneration. As is well known, income tax is deducted at source in respect of income from salaries. As the income of salaried taxpayers is fixed, they are more susceptible to inflationary pressures. Therefore, there have been progressive attempts in the past to grant relief to salaried taxpayers in order to subserve the aforesaid objective. A number of exemptions and deductions in respect of various allowances and other receipts have been provided in the Income Tax Act 1961 over a period of time. Nowadays, Flexi Pay package is very popular amongst the employees. As per the Flexi Pay package, within the overall consolidated amount of remuneration or cost to the employer fixed per month or per annum, the employee is allowed to choose the items of payment or benefits which are most suitable to him. It may be stated here that in a flexi pay package, certain items like basic salary, dearness allowances, etc. are fixed, whereas the other items of payment or benefit the left to the choice of the employee. What is remuneration? Remuneration is the total compensation received by an employee. It includes not only base salary but any bonuses, commission, payments, overtime pay, or other financial benefits that an employee receives from an employer. In order to formulate some broad guidelines for the aforesaid purpose, the relevant provisions of the Act and Income Tax Rules 1962 will have to be examined. In addition, the relevant case law will also have to be referred to. The same are examined or discussed hereinafter. First one, charge on salary income, section 15. Section 15 is the charging section in respect of income from salaries. This section brings to charge the following categories of salary. Any salary due in previous year, whether paid or not. Second one, advance salary. And third one, arrears of salary. Income tax relief for salary received in advance and on arrears of salary received for earlier years. Section 15 deals with the basis of charge. Salary is chargeable to tax either on due basis or on receipt basis, whichever is earlier. However, where any salary paid in advance is assessed in the year of payment, it cannot be subsequently brought to tax in the year in which it becomes due. A combined reading of section 15 and 16 will reveal the following basis for charging salary to tax. First one, due basis, second one, payment basis, and third one, allowance basis. Second one, deductions from salary, section 16. Clause IA has been inserted by the Finance Act 2018, which states a deduction of 40,000 rupees or the amount of the salary, whichever is less, shall be allowed. Written down value should be allowed 1/4/2019. Entertainment allowances under section 16 clause 2 received by an employee is to be included in the income of the employee under the head salaries, and thereafter a deduction therefrom is permissible subject to the conditions and limits laid down under section 16 clause 2 of the Act. Amount of standard deduction is rupees 40,000 or amount of salary or pension, whichever is lower. However, the Finance Act 2019 has increased the maximum amount of standard deduction from rupees 40,000 to rupees. Third one, perquisites, section 17 clause 2. Section 17 clause 2 of the Act gives an inclusive definition of perquisites. This clause comprises 6 subclauses followed by 2 provisions, and they deal with the following perquisites. First one, value of rent-free accommodation provided to the SSC by his employer. Subclause first, value of any concession in respect of rent respecting any accommodation provided to the SSC by his employer, sums paid by the employer in respect of any obligation which but for such payment would have been payable by the SSC. Subclause 4th, any sum payable by the employer whether directly or through a fund other than a recognized provident fund or an approved superannuation fund or a deposit linked insurance fund established under section 3G of the Coal Mines Provident Fund and Miscellaneous Provisions Act 1948, or as the case may be section 6C of the Employees Provident Funds and Miscellaneous Provisions Act 1952, to effect an assurance on the life of the SSC or to effect a contract for an annuity. Subclause 6th. 5th, the value of any specified security or sweet equity shares allotted or transferred directly or indirectly by the employer or former employer free of cost or at concessional rate to the SSA. Subclause 6th, the amount of any contribution to an approved superannuation fund by the employer in respect of the SSC to the extent it exceeds. Perquisite. Perquisite may be defined as any casual emolument or benefit attached to an office or position in addition to salary or wages. Perquisite is defined in the section 17 clause 2 of the Income Tax Act as including first one, value of rent-free or concessional rent accommodation provided by the employer. Fourth, unspecified employees. As per section 17 clause 2, perquisite includes the value of any benefit or amenity granted or provided free of cost or at concessional rate in respect of certain employees. Such employees may be called as specified employees. The specified employees in this context are as follows. First one, director employee, an employee having 20% or more of voting power in employer company, and third one, an employee who is drawing salary in excess of rupees 50,000 and does not fall in the aforesaid two categories. For computing the limit of rupees 50,000, the following items are excluded or deducted. First one, non-monetary benefits. Second, deduction on account of profession tax. Next, exempt entertainment allowance and non-taxable allowances. Specified employees are generally employees that satisfy any of the following conditions. They own more than 5% of their employer stock. They own more than 1% of their employer's stock and receive annual compensation greater than $150,000. Fifth, and special allowance or benefit. Section 10 clause 14, certain special allowances or benefits are exempt under section 10 clause 14 of the Act. This is very important provision. Special allowance is therefore money which does not fit into any other head in a salary slip or the residual factor. After all the different components of a salary slip including benefits are allocated, the remaining sum of money which makes up the annual CTC forms part of a special allowance. 6. One, important exemptions in respect of the salaried employees under section 10 clause of 10 of the IT Act. There are a number of exemptions provided under section 10 clause 10 to 10 clause 13A in respect of salaried employees. The same may be briefly stated as follows. Any death cum retirement gratuity received by central and state government servants in civil post or in the defense services and employees of the local authority which is exempt under section 10 clause 10 first. Any gratuity received under the Payment of Gratuity Act 1972 to the extent it does not exceed an amount calculated in accordance with the provisions of subsections 2 clause subsections clause 2 and clause 3 of section 4 of that act, which is exempt under section 10 clause 10 second. Any other gratuity received by an employee from one or more employers on retirement or incapacitation, or by his dependents on his death, not exceeding 1/2 month's salary for each year of completed service, etc., is exempt under Section 10, Clause 10 third. Any payment in computation of pension received by a servant of the government, local authority, or a public corporation, and any such payment received by an employee from a private employer to the extent it is exempt under Section 10, Clause 10A. Next, pay more special allowances to the employees which are exempt in their hands. In view of the reasons stated in earlier para 7, it would be advisable to pay more special allowances to the employees which are exempt in their hands under Section 10 or 17 Clause 2. In this context, Rule 2BB Clause 1 is very relevant. As per Rule 2BB Clause 1 Clause C, any allowance granted to meet the expenditure incurred on conveyance in performance of duties of an office or employment of profit is exempt from tax. Conclusion. As already pointed out, no hard and fast parameters can be laid down for the purpose of tax planning in respect of income from salaries. Only broad guidelines may be provided in this regard, and the same in respect of income from. Conclusion. As already pointed out, no hard and fast parameters can be laid down for the purpose of tax planning in respect of income from salaries. Only broad guidelines may be provided in this regard, and the same have been discussed in the preceding paragraphs. In conclusion, rewarding human resource through the medium of employee remuneration is a very vital instrument of influence, as it is possible for the HRM to determine the future goals of an organization with regard to proportional increase in productivity, and above all can be of great significance in an employees. Thank you.